Enterprise Products Partners EPD has performed extraordinarily well compared to the market over the past year. We can see year to date they are currently up 14.4%. Now this is a stock that currently has a dividend yield of 7.18%, and they've been increasing the amount they pay in dividends for 26 years. So that combination of a high dividend yield with that record of increasing their dividend payouts has made it an extremely popular stock. So in this video, we're going to be performing a stock valuation on them to find their intrinsic value. So to do that, we're going to jump into my valuation spreadsheet where we have 4 different valuation models. We have Graham's valuation, a discounted cash flow model, a multiples valuation, and a dividend discount model. And all 4 of these valuations will roll into our output tab. So let's go ahead and jump over to our stock screener. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So let's go ahead and come up here and plug in EPD's stock ticker and hit enter. And we can see all this data is going to automatically fill in. We can see over the past year, they're up 11.25%, and over the past 2 years, 54%. And when we look at this chart, we can see the industry as a whole has performed really well, not just EPD. Like I said, dividend yield 7.18%, so a really high dividend yield. Payout ratio is a little high, but we'll get back to that just a little bit later. Now let's go ahead and jump into our first valuation model, which is Graham's valuation. And I'll go ahead and zoom in here just a little bit. And essentially, Graham's valuation is a valuation model invented by Benjamin Graham. He was one of Warren Buffett's mentors, and he wrote the greatest investing book of all time, The Intelligent Investor. And this is the valuation model he laid out for us. We can see for this model, we're going to take the earnings per share for EPD, which is listed here, and multiply it by 7, which is the price to earnings of a company with no growth. And that's going to be added to 1G, which is 1 essentially added with our growth rate projection, which analysts are projecting about 10 for that. Then we're going to multiply it by 4.4, which is the average yield of AAA corporate bonds. Once we have that number, we are then going to divide it by Y, which is the current yield of AAA corporate bonds. And at the time of this video, it is 3.96, which is actually quite a bit higher than it has been over the past few months. And that's going to go ahead and lower the intrinsic value. But with Graham's valuation, it's giving us an intrinsic value of $39 per share. Now let's go ahead and look at our discounted cash flow model. And essentially, in order to perform a discounted cash flow model, we need to project a growth rate for the future free cash flows for this company. So in order to do so, I looked up the historical free cash flows for the company and listed it right here. This allowed me to see what the growth rates were year over year for this company as it pertained to their free cash flow. And we can see over the past few years, they had an average growth rate of 17%. So that is a really good growth rate. I'm projecting for the future, we're going to see a growth rate in this industry with EPD of about 10%. I think that's a pretty solid growth rate overall for the long term. So I applied that growth rate to the future free cash flows for the company and used it to calculate the terminal value, which is the sum of all the future free cash flows past the year 2030. I then took the present value of all of these future free cash flows and added them together here. I then added the company's cash and cash equivalents and subtracted out their total debt, and this allowed me to find their equity value, which is listed right here. After getting their equity value, I divided it by the number of shares outstanding for this company, and this led to a price per share of $23.87. Now let's go ahead and look at our multiples valuation model. And essentially the idea behind our multiples valuation model is using a price to earnings multiple, we can find the intrinsic value of EPD based on how the market is valuing companies that are similar to it. So we can see I'm using companies like Energy Transfer, ExxonMobil, and a couple of other similar companies. We're taking their stock price and dividing it by their earnings per share, which gives us their price to earnings multiple. Now I then took the average price to earnings multiple for these companies and I multiplied it by EPD's earnings per share. This gave us an intrinsic value using the multiples valuation of $23.26 per share. Now let's go ahead and look at our dividend discount model. Now the dividend discount model is going to be pretty important for EPD because obviously one of the large reasons investors love this stock is because of its high dividend yield. And essentially our dividend discount model is going to give us a valuation based on how much the company pays out in dividends and how much it is growing their dividends. So to perform this, all I did was listed how much the company has been paying out in dividends over the past few years. This gave us our yearly dividend rate, and it allowed me to see the growth rate for these dividends. And we can see over the past few years, their average growth rate for their dividend payouts is just 1.8%. So not a super high average growth rate for their dividends, but it does start at a pretty high yield. So for the future, I'm projecting a growth rate of about 2%. So after applying a discount rate of 8%, we can see our dividend discount model is giving us a price per share of $31.62. Now, if we jump back over to our stock screen and come over here to the right, like I mentioned earlier, the payout ratio is sitting at 85.5%. So that is a lot higher than I would typically like it to be, but it does have a much higher dividend yield, which makes it a little bit more attractive. I think that is something to take note of, and it's something to keep an eye on if you're considering investing into this company. The free cash flows, as we saw in the discounted cash flow, are growing, hopefully at a fast enough rate to sustain that dividend, but we do need to keep an eye on it. So let's go ahead and jump over to our output tab, and here we can see all four of our valuation models. Graham's valuation at $39 per share, multiples at 23, discounted cash flow at $23.87, and our dividend discount model at $31.62. When you average all four of these together, it gives us an intrinsic value of $29.56 per share, which compared to the current price, it's about $4 per share higher. So we need to always apply a margin of safety to help reduce some assumption risk and market risk. So I'm going to go ahead and apply a 20% margin of safety. And we can see based on that, our acceptable buy price is $23.64 per share. So our spreadsheet is telling us this is not a stock we should be buying. It is pretty close to that area where we could consider buying this stock, but I think at the current price, it does make it a little bit more difficult. Now, as for me, I do currently own some shares of EPD, which I bought months ago. So because of that, I have seen some really nice capital appreciation and received a fair amount of dividends as well. And you can see all of that in my monthly portfolio dividend updates. So be on the lookout for that video coming out again soon. I think at its current price, I don't currently plan on adding any more shares. I'd like to see it go a little bit lower before I add more, but I am going to keep it on my watch list, and I am going to continue to reinvest its dividends. So go ahead and let me know in the comments below what your thoughts on this company and this stock are. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. You can also join my Discord at my Patreon page, and go ahead and follow me on Twitter if you'd like to keep up with my dividend investing journey. So that being said, thank you guys so much for watching this video, and please don't forget to like and subscribe to the channel.